All right, good morning, guys. Just want to do a quick video on something that I use in my trading quite a bit, and I think it's one of the most powerful tools when trying to read the market. It's called the volume profile, and hopefully by the end of this short little video, you guys will understand, what it is, why it matters, and how to start using it. So basically, volume profile. So most indicators, think RSI, MACD, even like moving averages, they're all built on past price data. And that's, you can argue that, whatever, but the reality is that markets are always moving forward. So there's a little bit of a disconnect there. And what we really need and what we're seeking in markets, obviously, is a framework or a tool that tells us what the market is actually saying right now versus in the past data. And that's where volume profile comes in, kind of that real-time touch point, to give us an idea of how price is reacting, directional bias, what levels are important, and how those levels are acting. So to understand this, you have to understand markets, and also just think about markets at their core. The market is just a price advertisement. It's advertising different prices. So companies, governments, crypto, whatever it is, they issue these stocks and bonds and assets, and they let the market decide what's a fair price. It's not me or you deciding, it's the market, it's everyone. It's buyers and sellers. So if the market likes a price, it accepts it, obviously, right? So if it likes a price, accepts it, buyers show up. That's where the buying volume shows up, and price moves higher. And if the market doesn't like a price, it's, like a person in the grocery store, it rejects the price. It says, I don't want that. And price moves away fast then, right? It goes down. It doesn't approve of that price. So just thinking about that more broadly, everything in the market, your crashes, your rallies, your FOMO, greed, whatever it is, it all comes back to acceptance or rejection of price. And you should always kind of have that in the back of your head at different levels as far as, okay, what's happening here? Does this look like acceptance or does this look like rejection? So look at this here on the screen. So volume profile has this kind of histogram shape that it can run alongside your chart. Some people do it on the daily, but I prefer to have it on my chart. And each of these horizontal bars here, they represent a price level. So the longer the bar, the more volume traded and more trade activity at that price. So this aligns with 180, up here is closer to 187, 190 maybe. But think of it like a bell curve tipped on its side. So like this would be, let's see if I can, it's not popping up, but yeah, this fat middle here, that's where the market has agreed on a price. So the market seems to have agreed that this 180 level was a fair level for quite a while. For this kind of choppy middle here for 6, 7, 8 months, 180 was the agreed upon price between 180 and 190. We call that the high volume node, or HVN. And these thin, skinnier areas here, that's where price has moved fast. So there's not a ton of trading activity there. Nobody really wanted to trade at these levels, or price hasn't been there for a long time. So the simplest way you can think about this is the fat bars, the high volume nodes, those are price acceptance. So a support resistance zone, that's where activity's been. That's probably where activity is going to be in the future. And these thin bars are the price rejection. So market moved through fast for whatever reason. Maybe it rejected because they thought the value was higher. Maybe it rejected and moved lower. But those were prices that were not accepted by the market on this daily 1-year time frame. And again, this can move across time frames, but I typically look at the daily chart. So essentially, what you guys need to know is these high volume areas are gonna be super important to tell you potentially what's going to happen next. And obviously nothing's going to tell you exactly what's going to happen, but this gives you the best framework based on actual activity that's the most in real time and real volume, real buyers and sellers making decisions. So if you see here on NVIDIA, this 180 level this 187-ish to 185 level. These 3 bars are the biggest 3 bars. And look where price dropped below here, bought up, dropped below here, bought up, dropped below here, bought up. Undercut fake out, 5-day rip. So this is kind of the level under here, drops below, 1 daily close below, 2-day rip, right? Hold. And then this is the real undercut. And it goes on a 30% run in less than a month. So in these levels, keep in mind, these high volume nodes can be support, they can be resistance, but what they're doing is giving you a tell on potential direction, and your job is to say, okay, I'm seeing these levels, I see the high volume node. Is price rejecting this level, or is price accepting this level and going the other way? So I see here, accepted and went the other way. Other way. So it's just been a rubber band for the last 6 or 7 months. And you hear that word rubber band, right? These price levels are all stretchy. So if you had your stop loss at 172, because that was this first breaks low, you get stopped out here, you add again, okay, great, stopped out again. So what I do is I have sort of a 24-hour rule or a daily candle close rule, or a back-to-back daily candle close rule, where I basically monitor the situation and say, has there been multiple candle closes on high volume under the level, or is it one candle close under the level and a quick snapback? That tells me price does not want to go lower, and I use the HVN, high volume node, and the volume profile to see where exactly these levels are. And on the same side of it, you can see this level right here, this 190-ish, has been the same thing, kind of the upside to build this channel, this consolidating channel, which is ultimately creating this high volume node. So the market agreed that between 190 and about 175, that $15 range, was a fair price for about, like I said, 8 months. So until price breaks out of this range, it's probably most likely going to chop around. So again, I hope that all makes sense. And once you start seeing this, you can start using it in your trading, and start just by putting it on your chart and watching it for a few weeks, watching the high volume nodes, seeing where price moves through the low volume nodes and how price reacts at these different levels.